Okay, we will start for today. We will go over chapter 7 and chapter 8, if possible. And before we start it, I just want to remind everybody for next semester, starting from September 7th, I believe, I'm going to offer the new course, Business Law. And this is the textbook I'm going to use. And I already sent the PDF file to Catherine, to the office, and also along with my syllabus. Course syllabus is available at the office. I will highly recommend for everybody to purchase this book as early as possible, because it took me more than 2 weeks to receive this. So if we talk about 2 weeks from today, is maybe almost about the time we gonna have this new course start. Okay, and you know, the brand new book is more than $180 for this one, but for this used book is only $2.50 plus another $3 for shipping, so under $6 you can handle it. Okay, so highly recommend. Don't wait. Okay, otherwise you may miss my business law course for 2 weeks. So anyway, so I have this available, on PDF file for everybody. So just ask, okay, please. So you can, pass around. Okay, for chapter 7, we're gonna talk about inventory. Okay, and let's go back to the basic example we used for a couple times already. All right. Assuming, okay, this ABC company, okay, assuming this ABC company made a sales on a certain day. So on a certain day, this ABC company made sales. Assuming sales price 12,000 for net 30 days. Net 30 days. Okay, so this is the number one information. Okay, on certain day you work for, okay, you are accounting people, you work for this company, so you receive one very basic information. On this certain day, the company made sales, and the sales, say revenue 12,000, but no cash received, and this sales is 30-day net payment. Another information, okay, for this merchandise ABC company delivered to its customer, the inventory account is 8,000. Okay, so this is a very basic example we've been using for a couple times for this semester already. So I hope everybody still remember this basic example. And let's just get a little bit review. Okay, if you want the accounting people, you work for this company, and based on this very simple information you collect, okay, or you receive from sales department. Remember, you are accounting, right? You receive this information passed from sales department, and also another information from your inventory warehouse department. What kind of bookkeeping you need to do?
Revenue.
So I just want to remind you, probably there should be 4 accounts related to this. So let's pick out the first one. By the way, fall semester 2011 schedule is available right now, including my new course, Business Law, and also another courses available. Alright, so tell me, what kind of account you want to pick up for this transaction? I will pick up revenue. Every time if you see the transaction involve the sales, make it simple, I will pick up revenue this. Here. I would like to pick up revenue. Make it easy, right? And revenue increased by 12,000. An increase is on the right side. Alright? So this is just very basic review, okay, here. So we have 12,000 on the credit side. So let me pause for a second. Any problem here? Any doubt? Any puzzle? Any confused? Should be fine, right? So far should be fine. And we need to pick up another account to match this. So another account should be 12,000 and on the left side.
Account receivable.
Yeah. So I want to make sure everybody on the same pace, right? So in order to match 12,000 under the revenue on the credit side, we need to pick up another account to match same amount 12,000 but on the debit side. So as you just say, is account receivable because no cash received. So we have account receivable is under the assets. So when assets increase, is on the debit side. So we have revenue to match this account receivable. All right, pause for a second. Should be fine, right? No problem. Easy part so far, right? Okay, how about the third one? As I mentioned, you should consider at least 4 accounts. How about the third one?
Inventory.
Yes, inventory. As I said, inventory value 8,000. Makes sense because your company want to make a profit. So when the sales at 12,000, usually your inventory should be below than that. Otherwise, your company does not make profit. So the other account we want to pick out as the inventory. Okay. Now, we pick out the right account here already. And the next thing is we need to identify inventory belong to which category.
Asset.
Yeah, inventory is another asset. Eventually, if you read the book, inventory is current assets. Current assets mean easily being transferred to cash. Okay, under assets category, there are so many, the long list of assets. The number one is always cash. Cash is always very important, right? Because the company, you need cash to pay off your debt, okay? To keep your company still running, operate, right? So number one is usually cash, and then you have account receivable, then you have inventory. Those accounts usually mean you can turn into the cash, if not right away, but no later than 30 days. So like account receivable usually mean you can receive within 30 days. Inventory, eventually, for big company, they try to use zero inventory management. Okay, like automobile manufacturer, they try to keep very, very low level inventory. Then whenever you need it, you have inventory come in and then you ship out. So when we talk about inventory, usually mean you can turn into cash within very short period. Right. The other account probably like a short-term security. Okay, your company just purchase another company's stock, but anytime your company can resell it. Okay, so inventory is another account under assets. Okay, but right now inventory reduced, right? Because you ship inventory to another company. So here, reduce is on
Right side.
which side?
Right side.
Yeah, right side also we can say credit side. So you reduce. Remember, okay, in the accounting world, we don't use negative side, we don't use plus side, right? We just use right or left. Okay, always remind everybody. And here, no any rule to tell you which side, but under the assets, right side, credit side usually designate as a reduction. So right now your company ship 8,000 inventory to somebody else. So from your company standpoint, in the warehouse, the inventory reduced by 8,000. So this is reason why you enter this 8,000 number under the right side, under the credit side. Okay, so the last part should be easy. You need to find another account to match 8,000 but on the opposite. That means on the debit side. So what is that account you want to pick? Yeah, cost of goods sold is this one. Cost of goods sold. Okay, so you have cost of goods sold here. Right. So right now, you match everything. You match everything. Right? So from this very simple transaction, one sales, very simple. And the sales eventually is very typical transaction for almost every business entity. Otherwise, you don't open the business, right? So for any kind of business, okay, resale, manufacturing, service, any kind, your activity eventually is based on sales. If there's no sales, no business, and no entity. So this example is a very, very typical transaction for almost everybody. Yes?
It's a real company. Suppose the cost of the assets, it should be a column, say profit.
Well, mention that. Don't worry about profit, okay? We will see where the profit from. So again, from this very simple transaction, we see this. Okay, let's talk about the profit. As I said, right? There are 5 categories for each business, but there's no category under the name profit. You see what happened? Where's profit, right? You don't need to worry about profit because the profit, we don't, at least, okay, for accounting purposes, for bookkeeping purposes, we don't need to worry profit from each transaction. We only calculate the profit by the end of each period. So you don't need to worry about the profit for this transaction, even though we know profit is $4,000. We know, but there's no account to show you $4,000 right away because you don't want to be bothered for each transaction. Too much headache, too much homework, you know. So then you ask me, but how about profit? Where is a profit account? Because my manager really care about the profit. Show me the profit. Okay.